the Heiken Ashi candlestick patterns. Heiken Ashi candlestick patterns, the word Heiken means in Japanese average, and the word Ashi means pace. So we are looking at a market where the pace of the market, or the rate at which it has been going up or down, or even if it's sideways, the change of prices have been averaged out. So when we say that we have averaged out the pace, we essentially mean that we have smoothened it. If we have smoothened it, we are essentially saying that we have made it a little slower. The pace has slowed down, has toned down. So the Heiken Ashi candlesticks will not be as volatile as the real candlesticks. Will not be as edgy or as volatile as conventional candlesticks. Okay. So we have the chart of TCS open in front of us. There you go. And over here I can change the way I look into these candles, and I can make it Heiken Ashi. This is the same TCS, the same time period of daily periodicity, the same open high low close. Nothing new has come into the chart, but the way it looks has changed. The way these candles are calculated depends on a formula which considers the open high low close of the last candlestick and the open and close of the previous. It goes into a formula which leads to a look and feel of an Heiken Ashi candlestick. Now what I'll do is, this is TCS. I'll leave this in front of you for a few seconds, and I would request you to share few thoughts on what do you see, what do you observe in this chart of TCS? What are your observations? What stands out in an Heiken Ashi candle? The pointers that stand out for an Heiken Ashi is, number one, because it's averaging out the pace of the market, it is far more smooth. And because it's far more smooth, trends are smooth, or trends are visually very clear. Trends are visually very clear. This is one good thing. Second thing is, when it's a strong uptrend, we notice that essentially there are no lower shadows or tails. There are no tails. Vice versa, when it's a strong downtrend, we notice that there are no upper shadows. Let's look into these. Clearly, the trend is more cleaner. I see a lot of greens when it's going up, and I see one-way reds when it's falling down. Look at this fall of TCS. If I compare this with the normal candlesticks, I see some element of greens coming in, which might make me think twice whether it's going to reverse or not. But when I average it out, when I smoothen it out, I see clean trend on the downside. It all reds. So it's smoother, cleaner trend. One. When it's an uptrend, when it's a strong uptrend, mind you, when it's a strong uptrend, we notice that there are no lower shadows. You notice over here, there is no lower shadow. That's a sign of a strong uptrend. When there are no upper shadows, like the case over here, these are strong downtrends. like these. Obviously, when I have shadows at both the ends, an upper shadow as well as a lower shadow, it means that it is neither a strong uptrend nor a strong downtrend. The prices are kind of consolidating. But if it's red in color, like the case over here, the bias is slightly on the downside, and if it's green over here, the bias is slightly on the upside. And another thing you will notice that before a big trend on the upside or on the downside, before a trend actually reverses, there are existence of small bodied candles and dojis. Especially when there are spinning tops and dojis like this, these are signs that there is a possibility of a reversal. There is a possibility of a reversal. Now, bullish harami pattern, bearish harami pattern, hammers, hanging man, engulfing, etc., etc., the patterns that we did yesterday, neither of these patterns will work over here. Heiken Ashi do not work on those patterns. They will not work. So I can say that dojis or spinning tops or small body candles can imply reversal. And then conventional candlestick patterns do not work here.